Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. In this video, we are going to be reviewing the Bitcoin 4-year cycle theory. Every now and then we like to do videos where we talk about the overall crypto space in more of a macro terms, and we really look at what's happening, what's potentially to come. Are we still following the Bitcoin 4-year cycle theory? And is this market in a bull or bear market? So we're hopefully going to answer a number of questions in this video. Like I say, the focus is going to be on the Bitcoin 4-year cycle theory because there are some very, very telling signs in here. One thing that I want to point out straight off the bat, let me quickly outline the video. So we're going to look at the Bitcoin 4-year cycle theory, quickly touch on where Bitcoin is today, look at things like the stock to flow. We're also going to be reviewing this cycle in comparison with other cycles. This chart does it brilliantly. Benjamin Cohen, I'm sure a lot of you know him on YouTube, has spoken about this in great length. He's a fantastic kind of analyzer of the Bitcoin cycles and crypto cycles in general. We're going to be looking at a number of metrics. Let me just say, why are we looking at Bitcoin when we're really kind of trying to relate everything to the overall crypto space? Well, that's because if this is Bitcoin and this is the total too, it really just follows Bitcoin's trajectory. So, you know, the whole market we know revolves around Bitcoin. That's the case now. Going into the future, it's possible that might change. But the reason we're doing this is because there are a lot of scared individuals. I notice as a YouTuber or somebody who talks on YouTube about the crypto space and individual projects, the sentiment has changed. You need to detach yourselves from your emotions, guys, and focus on something like this, which is the bigger picture, because it's my belief that cryptocurrencies are going to play a fundamental role in the future that we are moving towards. Reason being is because it's kind of like that horse and car analogy. You know, you're going to take a car to get to your destination over a horse any day of the week, and cryptos are a lot more efficient at a lot more things, or certainly blockchain technology is. And we look at cryptos kind of like how we look at the dot-com stocks that came out of the internet. You know, cryptos came out of blockchain. Lots of comparables there. Some people don't think it's quite comparable, but I think there is definitely a correlation there in regards to them both being revolutionary technologies that are going to influence the future. So, for those of you straight off the bat that do not know about the Bitcoin 4-year cycle theory, it's something we used to cover in a lot of detail on this channel before, you know, when we were, you know, in the dumps basically, and why we had so much faith in Bitcoin, because Bitcoin essentially follows a 4-year cycle theory that revolves around the halvening. The reason, lots of reasons why it does this, one of the main ones is because when Bitcoin halves every 4 years in terms of its rewards, essentially the miners get half of the Bitcoin that they originally did, which means that they become half as profitable. So you need that Bitcoin price rising in order to kind of even everything out. And one thing that I want to point out is we are currently in a 4-year cycle theory that ends this year, theoretically. Started in 2018 after our 2017 bull run. The one prior to that started in 2014 and ended in 2017. And you had the 2013 bull run prior to that. And what we're really going to focus on for now is this kind of 2021 bull run that we find ourselves in. And we're going to look at 2017 and 2013 because I think there's something very revealing. We know that we have sold off recently. Let's just quickly check how much we've sold off by. Around about 56% if we count the wicks. And we're going to count the wicks. We're going to show this for what it is. Now, I've said that I do believe Bitcoin has bottomed here, or it could go marginally lower, but generally we're calling a bottom here for Bitcoin and a recovery out of it. The reason I'm doing that, lots of people calling for us going into a bear market due to the severity of this sell-off. They're basically saying that, look, in 2017, you didn't sell off in the sort of magnitude that we've seen today. My argument to that is, in 2017, you didn't have anywhere near the leverage in the cryptocurrency world as you do today. So that was, of course, with liquidations. We know 776,000 people got liquidated on this most recent sell-off. That's a historical record, essentially. One thing that I want to point out is, and that's essentially my reason for why I think we sold off as much as we did. I think the space has got a lot more leverage. We've not had that before, and that caused the sell-off. In 2017, you saw like 43% pullbacks, you saw 30% pullbacks, you saw them frequently the whole way up. We've done a lot of analogy on that. And we think that this is still in the normal sort of sell-off range comparable to the kind of market that we're in today. So we don't think we're in a bear market at all. We think you could definitely call this a short-term bear market if you really wanted to. A bear market is just defined by a downtrending market with a negative sentiment. You are in that short term. but you're in a bear market within a bull market, if that makes sense, because I still do believe that this Bitcoin 4-year cycle theory is going to play out. Of course, it's going to play out in different ways. Now, the reason for this, the reason that 2017 didn't look like 2013 was the market conditions were completely different. The same way that 2021 isn't going to look like 2017. I hope you're following what I'm saying here, guys. I'm trying to make this as clear as possible and really review the whole situation. We are going to get into comparing cycles in a minute, because this is going to lead on to the sentiment that I'm about to talk to you about. And that is that there is, market conditions are different. They evolve, whether that's right now us having more capital than we ever have in terms of market cap, so the market's going to be harder to move, or whether that's institutions getting involved, whether in 2013 you had a very small market. So the volatility that you saw, and let me just tell and show this to you guys, in 2013, around about the same time that we have a sell-off every year, you essentially witnessed, if you count the wicks, around about an 80% sell-off, if you count the wicks, so it's more like 70% really. You were still in a bull market here, guys. You just had a downtrending market for a while, and you recovered out of it to go on and make significant high highs, 1,000 and like 700% or whatever it was. So we've seen this current sell-off in the time period. So if we roughly work out when it started, and I'm going to show you something interesting here. We saw the recent sell-off around about August. We're now in June. Let's look at how previous sort of cycles, what they've done in around about this time period of August through to June and July. So here we are, April. This is around about the same time period. So this is May. Let's draw that a little bit more accurately for you. This was May through to August. You saw around about a 40% sell-off in the market back in that same time frame. There is a saying out there, sell in May and come back in St. Leger's Day. That is quite a famous saying, and all markets really suffer from that syndrome. Now, so we know we've had a sell-off recently during this time period in 2021. The prior bull run in 2017, we also had a sell-off. It wasn't as severe. We spoke about maybe the reason that it's so severe this time is because of the leverage in the system. Now let's take a look at 2013. And you can see April through to July, you have a similar thing take place. Now this was around about 70%, 70+%, and you were still in the bull market here. So there is a common reoccurrence in regards to time frames and what the market does. So whether how far into a year you are, whether it's the summer, whether it's the winter, that have a direct correlation and effect on the markets. So I still do genuinely believe that we're in a bull market. I think we've mapped out a number of things like our Elliott wave theory that dictates we're in this we're in the fourth wave now, coming into our fifth wave, and we do think this market is going to go well over 100k, and we've said around about 160k whenever this cycle chooses to end. And it is very uncanny how that the end of the bull market always correlates with kind of the end of the year. That was true in 2013, 2017, and also it really starts at correlation with the kind of end of the year and the new year. So that's very interesting. I want to also talk to you, and when we speak about market conditions, these are the 4 cycles that we've had. This was the first one. This was your sort of up to 2013. Here you can see you had your 70% dip here. The yellow one is this is up to 2017, and the purple one is our current cycle, and you can see we actually got overextended from it. Why did this happen? Well, because the governments all around the world decided to essentially print and inflate their fiat systems due to, in the name of kind of combating what we all know happened in 2020, March 2020, when we saw this kind of horrific sell-off that we saw. So that would have definitely had an effect on the market and inflated the prices. They've took M2 off for some reason, probably because they know how revealing it is off TradingView. But if you actually divided Bitcoin by M2, we weren't anywhere near as far. And that really looks at the monetary supply in regards to inflation. So this has definitely had an effect. And now you're seeing a pullback. Also, we got very, very overextended from EMA on the weekly. And we said, look, every time you do this, traditionally in cycles, you don't get this far ahead of it. You are going to come down and meet it at some point, like you always do, guys. So this is another kind of catalyst that would have sent us down. That is really due to the kind of money, the inflation of the monetary supply. So there's lots of reasons why we would have got overextended, but ultimately one thing that is apparent is you have this kind of diminishing returns. It's what Benjamin speaks about a lot on his channel, and the lengthening cycle theory. I'm not sure I necessarily subscribe to the lengthening cycle theory. We'll see. It could be on the cards. but we'll see. But ultimately, you are going to have diminished returns, and that still could put Bitcoin well within sort of Plan B's range, etc., etc. But we'll see how this plays out. So I think in comparison with the other cycles, we look fine. We really do, guys. In fact, we were actually outperforming other cycles prior to this. Pullback was kind of to be expected. And lots of people saying that this is all over, getting very scared, and you really can't think like that in the crypto space. I have a lot of people that get into this market that I'm helping get into the market in this current moment, and they can't believe I have to try and convince them that this is a normal for the crypto space, this kind of volatility, because they're used to dealing with traditional markets where things perhaps don't, these kind of swings, even the swings that we're seeing today, 4% on the daily, whatever it is, and weekly, 11, 19, 18%, whatever it may be, 31% on Polkadot. Polkadot's got really smashed, guys. I don't know 100% what the reason for that is. But I'm trying to convince them that this is normal, and they're looking at me like I'm crazy. This is normal for crypto. And if you can't handle the heat, you really shouldn't be investing in this market, because, I've essentially watched my entire portfolio sell off by around about 56%. And I can sit here quite confidently and endure that, without trying to mitigate it, without trying to do everything, because I know that ultimately, same back in here when everyone was going, oh, it's all over, and it turned out to not be. You had a fantastic run from that. This is the similar sort of event taking place today. I do believe that, guys. And people are going, oh, I thought the bottom was in, or why price is going. We called the bottom for Bitcoin. We said that this wick right here was likely your low, because if you looked at how much buying power came in to kind of meet that, that's where we got that kind of analogy from. And we still are holding it relative as support. It's 28k, that support floor where things get bought back up. Is it 30? There's going to be margin involved in that with how much you can or can't sell off. So in regards to the sort of cycles, we still think everything's a go, essentially. Plan B seems to still think so. This is a stock to flow model, which is very famous, and we're only in this kind of zone before we get that next big wave, which kind of ties into our us going into a fifth wave essentially, and continuing on in this bull run. So that there are lots of confirming factors. We have things like Glassnode. This is a kind of indicator. The stablecoin ratio, when it gets down to these levels, the same way that we looked at the RSI and the daily, when it gets down to past that 30 level, it signals a bottom really, and you recover from it normally, and we're seeing that true to this day. So like I say, I hope this video is maybe, if nothing else, entertaining, and hopefully keeping some of you on the right track, because I'm certainly definitely noticing a lot of sort of fear. A lot of people really worried, certainly if they bought back up here. But one thing that Bitcoin has shown us, guys, is that hodling works. Even if you'd bought at the top back in 2017, yes, you'd have had to hold for 3 years, but you would still be in the profits today, guys, and quite marginally. And actually, if you look at it in comparison with other assets, it outperforms everything, essentially. Certainly not this. You have a lot of things this year that have outperformed Bitcoin, where it is right now anyway, certainly not when it was at 60. But this is just how the cryptocurrency market works, ladies and gentlemen, and history tells us that. It's a very, very volatile asset class, the same way that when we looked at the dot-com stocks, and what happened even after the dot-com boom, they were exceptionally volatile because it was an emerging market, and this is how emerging markets work. So yeah, I hope this video is making sense. There are lots of metrics for me to suggest that we are still. Plan B here talks about the death cross. Twitter, by the way, guys, is one of the best places to get information on the crypto space, because there are and it's very short and compact, and bite-sized information is how I like to think of Twitter. It talks about the death cross and the other times that the death crosses have occurred, and that really they didn't signal anything other than if you were going to short the market, you were too late. Lots of metrics here. He plans out his worst case scenario, which puts us at Bitcoin at 135k by the end of the year, December, the end of the year. So I'm sure lots of people will be happy with that. And of course, altcoins are going to perform in a higher beta. So the market is still weak, but this to me looks like a bottoming structure. Can you see the way that you're kind of falling? You're in a bit of a falling wedge, perhaps. Not one of these kind of overhanging branches. You're falling, and there's plenty of history to suggest that this is kind of how you act before a breakout is on the cards. Now we're on a logarithmic there. So can you see how even here, you're falling down, you break out, you're falling lower and lower, whereas this is a kind of marginally highs. Marginally highs are bearish in my opinion. Marginally lows are actually quite bullish and more of a bottoming out structure. Doesn't have to be the case. So I think we've probably covered enough in this video. I hope you have all found this very entertaining. I certainly have enjoyed doing it. Hodl, you got to hodl, guys. If you bought at the top, you got to hodl. Is there the possibility for more downside? Absolutely there is. But we are biasing bullish in a macro bull market, and that's so apparent to me. You know, if you look at the rate of adoption that we spoke about in comparison with other technologies like the internet, but there's never been a technology that has been so quickly adopted than blockchain. So it's very, very impressive. I'm very excited and happy to be a part of this. You guys know I got in 2017 when the market kind of corrected. So, you know, I had that baptism of fire that's really allowed me to, you know, not only be profitable in the crypto space and educated on it, but to be sat here in front of you today telling you that I think everything's fine. And I could be wrong, guys. You've got to do your own research and you've got to own your own outcomes. Do not look to blame other people for your mistakes, because you will not. It's like that famous saying, a good workman never blames his tools, or a bad workman blames his tools, or whatever it is. You need to be making your own decisions and owning whatever outcome comes with it. And the argument, you said this was going to happen or you said that was going to happen, doesn't work, because at the end of the day, the buck stops with you. You need to make your own decisions in this market and deal with the consequences accordingly. So that is all I have for you in this video, guys. I hope you found this interesting. I hope this has perhaps put things into perspective, if nothing else. Remember, 2021 isn't going to look exactly like the overall direction is going to be similar to the prior two kind of blow off top bull runs. However, it's going to have its own twists and turns, and it's going to make up its own story. All I have for you guys, I'm going to love and leave you on that note. Hopefully you found this video entertaining. If you have, a like is always appreciated, so is a comment. And I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, ladies and gentlemen. Have a fantastic weekend, and I will see you all in the next one.